Hi, I'm Jenny Brown. Welcome to MFB News. I hope everybody is keeping really well. A bit frustrated here. We're trying to move house. We were due to exchange contracts in the next couple of weeks, and then someone further down the chain just pulled out for no particular reason, which is really annoying. And I know I'm not alone in experiencing this kind of things. Actually, this is the second time this has happened to us as well, so we're getting really fed up with the whole thing. And it's really given me cause to think that actually the house buying process in England and Wales compared to Scotland is really, it's not great actually. It's very stressful. And I do wonder if maybe if we change the way the house buying process worked, there would be a huge amount of time, anxiety, and also money saved. Something about starting a petition for the government to ask them to review the house buying process in England and Wales. Is anybody willing to join me on this? More news to follow on that if it is something I do decide to pursue. At the moment, I'm very keen, as you'd imagine. In terms of what we've got for you this week, there's some more lender changes to report, some more rate reductions, some criteria changes, and the green mortgage piece is continuing to gain momentum, so we're going to go into that. And that really is it this week. It's going to be a nice quick one for you with some really good things to share. Okay, so first up this week we have Precise Mortgages, who have brought out some new rates. So first of all, they've got some rates for limited company and personal ownership for standard properties. Their 2-year pricing now starts from 2.79%. Where does that sit in the market? Well, the lowest 2-year fixed rate for limited company ownership is at 2.59. That's with Kensington. So it's not a million miles away by any stretch of the imagination. I should also add here there are some even lower interest rates on 2-year money. On variable rate products, but these are green mortgages, so different price banding depending on whether the property is rating A, B or C. But let's assume that you haven't got a green property, therefore 2-year fixed rates from 2.59, but Precise have brought one out at 2.79. They've also got out some 5-year fixed rates. These are now starting from 3.09%. In terms of where this sits in the market, CHL have got the lowest 5-year fixed at the moment, which is from 2.88%. So look, in terms of the actual interest rates, they're not bad. They're not, earth-shatteringly good, but they're actually quite competitive. I think it's always worth mentioning that all that glitters is not necessarily gold in the mortgage space, and it's more than just the interest rates that we need to look at. So when at Mortgages for Business, we're pricing up deals for clients. Obviously, the interest rate is going to be very important, but we also like to look at the costs that sit around setting up the mortgage, so arrangement fees, valuation fees, any other incentives. So with these products from Precise, it's worth also therefore mentioning that they are refunding the valuation fee with up to a limit of £630. And they're also providing £500 cash back on certain products as well. So actually, it might be that when we align the overall cost of these rates compared to some of the lower, interest rate deals, these ones might work out better for you. Now on their HMO and limited company HMO products, their rates have come down. They're now starting from 3.34%. The lowest on the market is 2.99 comparatively, so again, not a million miles away. And again, with these, there's a refund of valuation on some of their products. So in terms of Precise, HMOs are multi-units up to 6 flats or 6 rooms. Minimum age is 21 to access a mortgage with them. There's no maximum age. Well, you can be up to age 80 application, and then you can have up to a 35-year term, so essentially no age limit. Now, they also have a no minimum income requirement. So for these guys, and for all lenders who say this, what they're saying is we don't need you to earn a threshold level of income to access any level of borrowing with us. But what the case has to do is make sense. So if we had someone who is earning £50,000 a year, but they've got a home and mortgage of £1 million, they've got 30 grand on credit cards, they've also got a car on finance. Actually, is that affordable? Not necessarily. If we've got someone who's on £7,000 a year but has no debt whatsoever in the background, does that make sense? Is this going to be sustainable for these people? So they're looking at the overall picture of the borrower, the overall profile. The other thing that we do a lot of business with Precise on is the lower value properties. They're very good here. So their minimum property value outside of London is £50,000. Their minimum loan amount is £30,000. Inside of London, depending on the postcode, their minimum property value is either £75,000 or £150,000. I would be really keen to see any properties with a London postcode that even start with that number. So we do seem to see Precise picking up a large amount of business on those kind of lower value assets which tend to be very, very high yielding. So look, not a bad offering from Precise there, not market leading by any means, but actually I think when we bring into account some of the more niche criteria and also the fee structure, this could actually be very, very attractive to some of the people watching this video. West One have released some green mortgage rates in the last week. So their pricing on their green products starts from 3.19%, and these are available for those properties with the EPC ratings A to C. What do we think about this? So look, it's really fantastic that lenders are pushing the green agenda for sure. And actually, if we look at the rates that West One have brought out and we factor it into their very good lending policy, so individuals and limited companies, no minimum income requirement, no maximum number of properties in the background. They've got some really good criteria with regards to things like they can consider studio flats of less than 30 square metres. They're good with things over commercial, excuse me, all that kind of stuff. Actually, it's a really solid offering. But if you said to me, what's your cheapest 5-year fixed rate on the market? The one that is actually lowest, as I've already mentioned today, is not a green product. So while it's really good that lenders are absolutely bringing this to the fore and we're pushing the agenda forward, actually, fundamentally, if you can obtain cheaper pricing on a non-green product, then something's really not going so well, is it? So look, in terms of the green product story, it really is a journey that we're on now, and it's absolutely fantastic that we're on that journey at all, and it's great to see lenders really sort of looking to drive better behaviours and make improvements. But what we need is the whole industry, all of the mortgage lenders, to do the same thing, so it really focuses everybody's mind. It's while you can still get a cheaper mortgage rate on a non-green property, it's going to lose its meaning and its impact. So we really do need all of the lenders to really pull together now and really start to push this really hard with the kind of attention and seriousness that it absolutely warrants. But back to West One and their green mortgages. Like I say, the rates are good. And actually, if you do have a property which has an EPC rating of A to C, and if you factor in the very good criteria that they have, I know that West One have bailed us out on quite a few cases where other lenders wouldn't consider them. So they're a really good lender to have in the background. So this is kind of like a really amazing add-on that they brought in as well. Now this one is a bit of a lesson for us, I'm afraid. So in the run-up to this week's video, there have been some really incredible rates on offer from Kensington. Again, more of a specialist lender. They're very good at limited company transactions, portfolio landlords, that kind of stuff. The other thing they were very good at is they are one of the very few lenders who are lending at 85% loan to value. And what we've seen is they have withdrawn no less than 14 of their products from their range. Why have they done this? So look, I suspect it is purely that they have been swamped with applications. They have taken a decision to withdraw some of the products to kind of slow down the flow of business coming in, so that those people who have applications in aren't facing terrible delays, which is very, very commendable. But I think also what it's symptomatic of is really how we're going to see things move going forward in terms of pricing. Last week we saw Precise Mortgages withdraw some of their limited edition products. This week Kensington have removed 14 of their products. It's not that lenders don't have appetite to lend, it's really a case of they need to make a really good commercial decision with regards to balancing first of all the return they make, i.e. the margin, the profit they're making on the deals. And with these very, very low rates that lenders are charging currently, the bit that's left over for them is very, very small. And they also need to balance that with bringing in new business. Obviously every lender wants to lend money, that's how they make money, but they don't want to get swamped with applications, and I think this is where we've seen Kensington come in. So I think really the message here for you is that if there is a deal on the market that you like the look of, please don't sit on it for a couple of weeks and think it's going to be around, or even think that rates are going to come down even further, because it really isn't a guarantee that's going to happen. Actually, what might happen, particularly for those people who've been mulling over the Kensington products, is that you might simply just miss out. So look, if you do have a rate in mind and you're sort of thinking about going ahead with it, please just push the button, don't delay, because we would hate for you to lose out. And lastly, just a quick trolley through of some other changes we have seen in the last week. So Principality have reduced their or some of their holiday let and standard buy to let rates by up to 15 basis points. The Nottingham have also reduced some of their rates by up to 24 basis points. We've seen the Ipswich reduce their some of their holiday let and expat products by up to 50 basis points. And they've additionally reduced the minimum loan amount across all of their products to £75,000. The leads have added some green mortgage products for those properties with EPC ratings of A to C, and these are available for normal properties. They're also available to non-portfolio and portfolio landlords of up to 80% loan to value, so great news there. Bank of Ireland have told us they're making some improvements to their buy-to-let rates in the coming week. They haven't told us what they're going to be yet, so we'll report on that again next week. And lastly, Vida have withdrawn a bunch of their products and then bought some new ones out on a limited edition basis. Looking at the pricing, actually here they're not bad. 2-year rates start from 2.89%, 5-year rates starting from 3.29%. So if you think back to the start of this video, these rates are by no means market leading, but again, Vida do have some fairly niche pieces of criteria, which may mean that these rates in terms of what you can actually access, depending on your circumstances, are actually very, very good. So look, a very busy week in terms of lender changes, probably not the absolute snowball of changes that we've been seeing in previous weeks, but things are still definitely largely on a downward trajectory. What we haven't seen is any real repricing upwards. What we have seen is lenders start to consider their portfolio offering. Clearly amendments on pricing downwards are still going on, but also some lenders are now sort of saying, you know, hang on a minute, we're getting far too busy, and starting to pluck out certain products to slow business volumes down. And that is everything for us this week. Thank you as always for joining us. I thought I'd keep it relatively short. I think we've all got quite a lot on our plates at the moment, what with fuel crisis, Labour Party announcing their plans to cap rental income if they come to power and the like. So look, let's hope next week will find me in a more positive mood. Hopefully I've sold my house and everything will be back on track, but we'll see. I'll keep you posted on my plans for a petition. And if you do have any questions, as always, we would love to hear from you. 0345 345 6788, or do have a look at our website, mortgagesforbusiness.co.uk. Until next week, look after yourselves, keep dry, and we'll see you same time next week.